everyone doing today? All right, we have some action happening here in the dollar, and we'll get to it in a second. Want to get this live on Periscope here. How's everyone doing today? So, I've been talking about the divergences that have been building up in the dollar index and talked about being flat for the first time in a while and actually put out buy recommendations in US dollar yen and the DXY yesterday early, so I've already taken partial profits on this, and let me just get this posted now. There we go. All right, let's start off with the dollar. You can see it's coming out of the hole. Told you that this was my first cover, was my cover from, selling rallies all the way down because it was the first low that diverged. We ended up with one more that diverged as well at 560. So, I mean, this was the buy zone. First was the cover. Second divergence was the buy zone. We moved sideways. There was a possibility for another one, but we're coming out of the hole over the moving average now. To me, it looks like the Dixie has legs. 107.50 is going to be a big level because if we start getting over 107.50 or so, 108, well, even over this, if we can't, if we get above this return line down here, there's something else going on in the dollar. Keep in mind, tariffs are going to be announced. This was the last time tariffs were announced. It didn't stick because we had the delay. So we'll see. Anyway, I think a lot of the market is wrong-footed here, a lot of dollar bears, and we're due for at least a shakeout. I also put out longs in US dollar yen. It hasn't performed as well as a dollar, but I would not be short here. We could get some type of squeeze in US dollar yen. And when I talk about the yen, I have to talk about yields. And for the first day in a while, yields are up on 10-year 4 and getting a little pullback in TLT. Then this is in front of the PCE where people are looking for kind of a softer number. So the risk is we come in with a hot number. So let's get to the individual currencies. Euro pound told me that the euro was the preferred short. We're still heading down, so that hasn't changed. I talked about all the divergences that were happening up here. Look at this. So we kept trying to blow through 105, got to almost 105 and a half yesterday and failed. We could trade all the way down towards 102 and a half, especially if we get messy in the markets and there's some risk off, something I've been talking about. Risk off can pressure everything, and the dollar, people will come to the dollar, I believe, if that happens. Or if yields start to shoot up again, really, when you think about it, there's been nice progress in the euro, but if yields are going to head back up, we could trade back down towards the base. So be aware of that. Cable divergence, well, check out the candle. This was yesterday. So, I mean, this was 1, 2, 3. So there's a lot of stuff going on that, were kind of obvious, actually, that even though we were making new price highs, that there was no momentum behind them. So, I think 24.50 is viable. We'll see what happens after that. Aussie, on the other hand, is approaching a buy zone around this 62.30 level. So I haven't done anything yet. I want to see a day when the dollar is strong and Aussie isn't getting clipped. Okay, I want a message from the market. I'm not going to just step into the trade because it's a number I've had for a while. Price is king, and I want to honor the king by him giving me a reason to buy by price action. Price is the king. So we'll see what happens down here in this mid 62 level, which would be about halfway back of this advance. Moving on to gold, continued weakness. Put out some tweets. You guys know I was saying sell it last week, sell it last week. Finally got this big break. Here's a lesson in technical analysis 101. And the lesson is old support. And look how many times we held this 2920 level. Okay. Old support becomes new resistance. So it got above it once. But check this out. Last night's high was right there at 29.20.66. That trade was good for about 40 bucks already. I don't think gold has bottomed. I'm not looking for the gold crash. In fact, probably going to be a buy in the gold, maybe down around here, 28 and a quarter. A lot of Ellioticians are saying this is 4, and then we could get one more rally. Anyway, what's happening now is, being out of gold, which is something that I professed, and miners held up okay. Here's silver, still acting weak, but we are getting a little bit of profit taking in the gold silver ratio. We've come down pretty hard from the 93 level. There still could be another probe up there. See if we get divergence if that happens. But you look at silver, and this is the way it looks to me. It's like you have a flagpole, all right? And now this 32 area is pretty good resistance. And to me, this looks like a bear flag, okay? I could use a moving average here and then just draw a couple lines, and you could see it's kind of a flag coming off a flagpole to the downside, breaking back down under 3150. If you just do a measured move from here, we won't even go to the highs. We'll do it right here. It's 3320, and this is 3126. So let's call it $2. $2 under this breakdown gives you 29 and a half. And there are some major trend lines. I know a lot of people are going to try and buy it around this 30 and a half level. We'll see. My big picture is even though gold could make a new high, I don't think silver will when gold does that, if it does it. But, this formation's still intact that we could get something like this to here. But the big test is look at all the confluence at 30 and a half. So 30 and a half is really do or die for silver. We'll see what happens when we get there. I do want to cover some risk and talk about the morphing of the S&Ps from false breakout into a descending triangle. And I'll just give you a refresher course on what could happen after a descending triangle. So if you can see how many hits that we've had at this 5920, 5920. Then we had this overthrow, which I thought was a breakout, so I covered here, and then had to recommit. Now, just because you cover doesn't mean you let it go, even though I had to get in at higher levels for bearish positions. This to me looks like a descending triangle. And here's an example of what can happen after a descending triangle. Under 5920 is going to measure 5720. So I have some fibs drawn here. I think we're going to have a hard time getting back above, for sure, the 60-60 level. So I believe you sell rips between 60-40, 60-60, if offered in the next few days, because I'm anticipating a breakdown. I don't think March is going to be such a great month. So I wanted to show you a parallel example and what happens when a descending triangle is violated. And here you go. Here's a descending triangle that we had in Bitcoin on the daily. So it was there for a long time, but the similarities are how many tests we had at this 92 level, right? Here, here, false breakout and rally to new highs, held again here, and you finally get the breakdown. and we're getting some acceleration. Is Bitcoin going to hold here? I don't know. The measured move off this formation, call it 92 to 109. So you're talking about 1782, 75,000 would be the measured move off this. So I'm looking for that to also occur in the in equities. So NVIDIA, we needed NVIDIA to try and uh, kind of hold together. And actually, after earnings, we had a nice candle, but it's starting to fade right now. There you go. So it's very possible that, this is another failing rally in NVIDIA. And, but this was the earnings candle right here. This happened during the earnings. So we take out the low of earnings, it's going to look pretty ugly. Some of the other, Apple's up a little bit today. Um, I still think it's going to break down. We need it under 237. Meta's bouncing today. Not a good looking candle. Not a good looking candle in Goo. Microsoft is do or die, and so far it's do. I mean, look at this level. Microsoft has to hold this level or it's in for a big downdraft. See how far back it goes. And it's a big measurement. You could call it 456 to 456. This take you down to 340, which is a huge move to the downside. Take a look at the weekly. Yeah, and look at that. You have some weekly moving averages coming in here. Rips 4.25, I think, should be sold here as well. That I think is going to be a wrap. We're getting a little bit of a bounce in oil, so we'll see what happens there. We're also fading in S&Ps again, 59.75. So the weekly looks negative. We really haven't bounced this week. We get a rally maybe on a PCE number tomorrow. It's still my contention to draw your fibs and look for a spot to sell. And then you're wrong on closes back over 60.88. So the more it rallies, if it rallies, could also go to new lows before we bounce to a close over 60.90, the lower the risk on the trade. But anyway, I'd say the cleanest signal that we're getting that's new is the dollar. Okay, that's a nice looking chart. And first of all, you're warned to not be short anymore. And now we're long. First time we've been long the dollar in many months. In fact, since the highs at 110.50. So let's see what happens here. If we get another, emotional post tariff, I don't think they're going to be delayed, but a lot of people are getting they're being squeezed. And if we start getting over 107.50, I think the dollar bulls will have their date for even a retest up here. Also, be careful about being short US dollar yen. It's become a popular trade, but we've already broken, 1,400 pips. And I just want to show you how important. See, I have that black line drawn, and I drew it way before the market got there. So let's look at the weekly. All right. Maybe even clearer on the daily. So this is a pretty good place for US dollar yen to stop. See this here? All right. This was an important level, and here we are. So we'll see. I mean, maybe we get a right shoulder. We get a squeeze up to 54. Most people don't think it's going to get over 150 again. That's because the market is completely convinced that yields that have been dropping are going to continue to drop. I'm not in that camp yet, but yields have to start heading up soon, or the yield bears are going to be right. I think we're going to get a lot of information tomorrow. So if you took my ideas in yen and dollar, you have money made. At the minimum, take half off, move your stops to BE. And there would be really nothing wrong with being flat into the PCE number tomorrow. But now we're going to be looking to um, not sell dollar strength, but to buy dollar weakness. So the worm has turned. Let's see if we get a reversal week. We have one more day left. Let's look at a weekly. There's your daily. This too held at an important level. And here, look at, we have some confluence at this 107.5 with the 50-week moving average. So let's see if we got that weekly reversal. I'm guessing yes. Yes, we have. Look at that candle. And again, look at where it held. Okay. Forewarned is forearmed. And I hope that, my rationale, you're learning about divergences. You understand, so at least when markets are not confirming new highs and lows, if you're long and it's not confirming highs, that you book it. And if we're making new lows with divergences developing, especially after the first one, that you're no longer you're no longer short when that happens. Just like it happened in the DXY this week when I talked about covering shorts. Was here, I think was last week or early. No, it was this week. The days run together as a trader. So I'll see you in the room. A lot of people are coming in. I posted these trades. Mike's in there curating, uh, his grade X list, giving market tells for option sweeps and ideas. TradeGATEHub is free. Come on in and bring your work, and um, iron sharpens iron. And above all, don't just count your pips, count your blessings. I'll see you tomorrow.